of Imperial is with us. David Shapiro was sweating a little bit, Hubert, hoping that his preference share dividend was safe. Well, it's more than that, because you're paying an interim dividend, a halfway dividend, for the 6 months to December. It's a little going against a bit of the trend. We saw Anglo-American cutting their dividend. They're trying to preserve cash. Many of the CEOs we spoke to recently are just trying to keep their cash as full as possible. What signal are you sending to shareholders?
Look, we had very strong cash flows. Our cash flow from operations was about 2 billion just on our continuing businesses, and that means there's actually persistence to that number. It's not cash flows that we just got out of the closure of some of the businesses. So we think our cash flows will continue to be strong, and we've got significant resources and bank lines and facilities. We've got about 3 billion of cash on the balance sheet. So certainly we felt it was appropriate to pay interim dividend.
Out of the woods then. It was a year ago you reported a loss. Things were looking a bit tough there.
Yes, a year ago at this time we reported a 500 million loss at the attributable level, and this year that number is 1.1 billion profit.
Now you have a lot of debt on your balance sheet still, nearly 8 billion rand. As against 14 billion a year, well, at the end of 2007. So you've cut that down a lot. But every 1 percentage point decline in the interest rates must presumably have quite a kicker on your bottom line.
Yes, a 1% decline gives us about 10 million a year. That is the benefit that we have. All of our debt is not at fluctuating interest rates. Quite a bit of our debt are
it's very low,
fixed rates.
Only 10 million rand a year compared with the kind of profits that you generate.
A significant part look, this is just the saving on interest that we are now talking about, and there you must remember that a large part of our debt is at fixed rates. However, if lower interest rates can work through to consumers purchasing more cars and the banks actually starting to lend more to the car buying public, that certainly will have a big kicker for us.
Has the car market bottomed yet?
We think it's still going to be difficult for quite a couple of months, and the cycle is not the normal cycle where we think car sales will pick up 6 months or so after the turn. The dynamics are a little bit more difficult, particularly as the banks haven't really been lending. So one needs to be patient. Kees
Bruggeman was interesting last night, saying that when I asked him about the motor manufacturers requesting a bailout from government, they had a meeting yesterday with the Minister of Trade and Industry. He said he wouldn't agree with, well, he said in his inimitable way that he only concentrates on macroeconomics, but that the cavalry is coming, interest rates are falling, and there are other benefits that could be coming to the car market. Would you go along with that?
I think the car market is still going to be difficult for quite a while. And some of the component manufacturers, for example, I mean, they rely on exports, also the local motor manufacturers. And the global vehicle market is under significant strain. So I can understand where the manufacturers are coming from.
David, if that's the case, why is the platinum price doing okay?
It's very interesting. It is related, but and if you look at the demand-supply situation, it seems to be imbalanced. They don't see it coming down that much. So it is quite an enigma to find out.
Your offshore operations, Hubert, in Imperial, are you seeing them under pressure?
They performed very, very well over the half year, but approximately in the middle of December, we felt a slowdown of significant proportions in Europe in our logistics businesses there, and this half year there will be quite difficult. And this is on the back of the motor manufacturing industries being down, steel industry being down, and the like.
Still trading profitably, though.
Yes.
I got the answer for that one. Very briefly. You know what's happened is a lot of scrap that was coming onto the market from the platinum is not coming on it because it doesn't pay them at these levels. And I think that's also reduced a lot of supply.
David, just to wrap up on this one, headline earnings per share were down 19%, helped by a foreign exchange conversion.
Yeah.
But it looks like Imperial's out of the woods now.
We were down 4% on the headlines.
For headline
level. Yeah.
Okay.
But I think there was a gain on
Forex. If
on
Forex,
I think if you stripped that down, it would have been worse. But I mean, that's how headline earnings are projected or worked out.
But you're looking at a good second half, Hubert?
No, Alec, the second half will be more difficult than the first half. But I'd like to just sort of correct you on the forex gains. I mean, the defensiveness of our foreign portfolio is part of the makeup of our group. And when we import goods, we suffer due to a weak exchange rate, but we also get the benefit on the other side in the makeup of our components.
All right, so we won't crucify you on that one. Important thing is David's preference share dividends now look very stable because and that's 15% tax free, Dave.
Oh, yeah, around about there. Mm-hmm.